Morning everyone, and thank you for joining us on the PPAP Automotive Limited Q1 FY2019 earnings conference call. We have with us Mr. Abhishek Jain, CEO and MD, and Mr. Manoj Taral, Chief Financial Officer of the company. We will begin the call with the opening remarks from Mr. Jain, followed with the forum of the question and answer session. Before we start, I would like to point out that certain statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would like to invite Mr. Jain to make his opening remarks. Over to you, sir.
Thank you, Snighter. Ladies and gentlemen, a very good morning to all of you, and thank you for joining us to discuss the operating and financial results for the first quarter of financial year ending 2019. I am pleased to share with you that we have reported a strong operational and financial performance during the period under review. I will begin today with a brief about the company, and then we will look forward to taking your questions and suggestions. PPAP manufactures polymer extrusion-based automotive sealing systems, interior and exterior automotive injection molded products in India. The company started its production by supplying automotive parts to Maruti in year 1985. With the state-of-the-art manufacturing facilities spread across India, with plants located in UP, Rajasthan, Tamil Nadu, and Gujarat, PPAP has grown its geographical presence strategically over the years. Through our various facilities, today we manufacture over 500 different SKUs and ship over 150,000 parts every day to our customers who are located pan-India, and our target is to achieve zero defect in quality and delivery. Some of the largest OEMs in India like Maruti Suzuki, Honda Cars, Toyota, Nissan, Tata Motors are already our customers, and recently we've added Hyundai, MG Motors also to our customers list. We predominantly service the passenger car segment. However, we have recently started supplying to the LCV and the two-wheeler segment as well to expand and de-risk the business while taking advantage of our core competence. In the LCV segment, we have recently started supplying to SM and Isuzu as well as Bharat-Benz. In the segment, our parts are supplied to Suzuki motorcycles and Honda motorcycles. 10% of what we produce are exported by our customers as part of their CKD kits to countries like Japan, Europe, Mexico, Venezuela, and others. Now I will take a brief moment to introduce our management. The company is led by Mr. Ajay Kumar Jain, who is the Chairman and the Managing Director. He is also the President of the Toyota Supplier Association as well as Director of ACMA. I am an industrial engineer and have been a part of PPAP for the past 14 years, and I also sit on the Executive Committee of Honda's Supplier Association. So we have established an equal equity joint venture with a company called PPAP Tokai India Rubber Private Limited, or PTI in short, with one of our Japanese technology partners, Tokai Kogyo. With this in place, now PPAP and PTI cater to the consolidated requirements of sealing systems for its customers, giving the company a strategic advantage of being a one-stop shop for sealing systems. Our other technology collaboration is with Nissan Chemetech Corporation for interior and exterior injection molded products. We continued our focus on core competency, built-in quality to achieve high standards of product quality, as well as cost optimization with a focus on R&D, robust product portfolio with strong brand, and technical partnership with international players. The company is on track to establish its presence in all the major automotive clusters in India to improve the proximity to the customer. We are extensively exploring all strategies which meet our objective of achieving profitable growth. In that direction, we are open to examine any organic opportunity as well by technical collaboration and joint ventures. To give you a brief overview of the automotive industry, the domestic passenger vehicle segment has seen a 10.2% year-on-year production growth in the first quarter. A total of 1.025 million passenger vehicles were produced against 0.93 million in the same period last year. The commercial vehicle production saw a growth of 67.74%, whereas the two-wheeler production was at 6.46 million, which is an increase of 14.62% for the same quarter compared with the same quarter of previous year. In financial year 19, the market is looking brisk and the passenger vehicle segment may grow at 8 to 10% based on estimates by SIAM and ACMA. Now I would like to take you through the financial performance for the quarter under review. The detailed slides have already been shared with you. I will request you to kindly refer to them. Consequent to the introduction of GST with the effect from 1st July 2017, Central Excise, VAT, etc. have been subsumed into GST. In accordance with the Ind AS 115 on Revenue and Schedule 3 of the Companies Act 2013, unlike excise duties, GST, VAT, etc. are not part of the revenues. Consequently, the revenue figures of June 2017 quarter include the excise duty, whereas June 2018 figures are net of GST. For the first quarter ended financial year 19, PPAP recorded revenues from operations of rupees 99.69 crores as compared to 82.09 crores in the corresponding quarter of last year, registering a growth of 21.43%. Part sales amounted to 96.03 crores, whereas the tool sales contributed 3.66 crores. EBITDA grew by a healthy 26.56% in the quarter, which was rupees 19.8 crores compared to 15.71 crores in the corresponding quarter last year. We could achieve a sustainable EBITDA margin of 19.94% in the quarter compared to 19.13% in the previous year. The stability of EBITDA is primarily due to the constant efforts of the company in achieving excellence across all the various facets of the organization. Profit after tax recorded a jump of 49.28% year-on-year and stood at rupees 8.85 crores in the quarter compared to 5.93 crores in the same quarter last year. We recorded a PAT margin of 8.88% in the quarter 1 compared to 7.22% in the previous year same quarter. The EPS for the quarter stands at rupees 6.32, which is an increase of 49.41%. Our capacity utilization has been at 75 to 80%. Capex for the first quarter stood at 15.27 crores. Our debt equity ratio stands at 0.13 with a repayment of rupees 2.5 crore of the existing term loan in the quarter. This brings me to the end of my discussion. Now I would like to leave the floor open for questions and suggestions that you may have. Mr. Dhariwal and I will try our best to answer all of them. Over to you, Lizanne.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself in the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may please press star and 1. The first question is from the line of Ankit Merchant from S&P Global Securities. Please go ahead.
Yeah, it's SMC Global Securities. So congratulations on good set of numbers. I would like to understand what is the utilization across all your plants right now. And second, you talked about getting into CV to, get into CV for this new compliance norm. So can you help us understand what is it and how are we going to benefit out of it? Hello?
Hello, Ankit.
Yes.
I will take up the first question, which was regarding the utilization across the plants. See, our capacity utilization on the extrusion side, which is the automotive sealings, has been about 70%, and on the injection side, it's been around 80 to 85%.
Okay.
On your second question, I request Mr. Jain to answer about this, CVs.
Yes. We've entered the commercial vehicle segment primarily with SML Isuzu, and we are making their complete instrument panel for them. So that is a new segment of product that we've entered into, and a new commercial vehicle segment. So right now we're doing only SML Isuzu, and now we're trying to get in touch with the other commercial vehicle players if we can get similar business from them.
Okay. One more question.
Policy changes that you were talking about, they don't really have any impact on us for our business, because we're not doing any engine technology products for any OEMs.
Okay. Actually, I meant it from the point of view of sealing systems, considering that the small commercial vehicles and they are likely to have compulsory ACs in the cabin. So that was my point.
Yeah. So whether an AC is required or not required, I think the sealing system remains same. So it doesn't really depend on.
Okay. Sure. Just one follow-up on the utilization. What is the peak utilization where you can reach and the revenue you can drive for both extrusion and injection side?
See, the peak utilization, we can easily go up to about 90-95% plus on the injection and on the extrusion as well.
Okay. And the revenue derivation is at peak capacity?
Yeah, see, looking at, at least we are not looking at, capacity requirement significantly in this year.
Okay. I meant how much revenue can you derive from this if you run the plant at full utilization? That was my point.
Ankit, now we do not have an exact calculation as to how much revenue we can go up to, but looking at the business expectation and we are fairly comfortable on our capacities. We can actually easily say that.
Okay, sir. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Arun Bakshi from Equirus Securities. Please go ahead.
Hello, sir. Congrats on the good set of numbers. My question is pertaining to the growth rate. Like, we have seen a very good number of 26% on our part sales growth. Just wanted to understand, like, was it purely on the basis of the volume growth, or what all factors led to such a good number? And what is the sustainable rate going ahead? What could be the sustainable rate?
Yeah, good morning, Varun.
Good morning, sir.
See, the growth rate is largely volume driven.
Okay.
And as we have been maintaining,
yes,
our growth rate is always been an alpha over the growth rate of the industry, because of the new parts and the new customers that we have been acquiring.
Right.
We are expecting the same trend to continue.
Okay. So can we expect a growth rate of 20+% going ahead?
See, while not putting a number to, this, we are fairly confident that our growth rates will be fairly healthy.
Okay. Okay. Sir, and my next question is pertaining to our gross margins on quarter-on-quarter basis. Like, we have seen a growth of about 380 basis points over the last quarter. I just wanted to understand, like, see, our raw materials are anyways not linked to the crude oil and all. So what has led to this growth basically in gross margins?
Varun, I'm assuming that you're comparing the March 2018 quarter numbers with the June 18 numbers.
Yes, sir.
Hello?
Yes, sir. Quarter-on-quarter growth.
Yeah. See, if you will see, in the March quarter, we reported a significant tool sales.
Okay.
On account of which our raw material cost was showing on the higher side. In this quarter, the tool sales has been significantly lower. So the raw material is primarily reflecting our part business.
Okay. Sure, sir. That's it from my side, sir. Thank you.
Thank you.
Thank you. The next question is on the line of Kalpesh Parekh from Prabhudas Lilladher. Please go ahead.
Hey, hi Abhishek. Hi. How are you, sir? Doing good?
Very well, sir. How are you?
Good.
Hello, Kalpesh.
Hi, Kaise sir, Manishji. Achha, sir, a couple of questions. One, we finally, after what good effort, whatever we have put in, we have made started supplying to Honda car for this new Amaze and this Toyota Yaris. So basically, just wanted to understand what could be the opportunity for these two products and what is there in the pipeline for new vendors as such, and how you see growth. I mean, you did mention for Siam thing for 8 to 10%, but for us, how you are seeing a growth prospects in this year?
Kalpesh, Honda Amaze was a very big project for us, which has started commercial sales in this quarter. So, Amaze we are there, and then Yaris also was an important model which started this quarter. And I'm not at liberty to say right now, but we are continuously working with Maruti and other customers also for their new models. So I'm not sure what you are trying to ask, but I can tell you one thing, that we are very much working closely with all the customers for all their new models. So there is not going to be a single model where we are not going to be present, unless and until it is a CBU kind of a model which is only assembled locally in India.
Right. But any other thing, such more supplies for any new product which will come in during this year, which can give a delta swing in the coming years?
There are a couple of models from Suzuki which are under development now.
Okay.
So I think 3 models are slated for production this year.
Okay.
So that will further boost up the revenues.
So should we expect at least a double-digit type of, since you are saying 8 to 10% for passenger vehicle segment growth will be there for the industry, should we expect we to be growing at least 20% type of thing for next couple of years?
I would say a double-digit growth is more favorable, but I would not put a number to it right now. But what I can guarantee you is that we'll be growing at a rate higher than the industry for sure.
Okay. And on the margins front, I mean, we are enjoying quite healthy margins of 19.94%. So are we seeing that as a sustainable thing, or there are more pressures coming in?
See, if you see the complete last year also, so our EBITDA margin ranged from 19% to 21%. So we are quite comfortable in maintaining that EBITDA level. So whatever changes are there in microeconomics or in or any other challenges are there, so we have a very strong focus on setting those cost increase by reducing optimizing costs somewhere else. Okay. So there are a lot of opportunities further for us to improve our cost efficiencies in the company, and that is our strong focus going forward. Okay. So we are quite comfortable in achieving these margins going forward also. Okay.
And my last question will be on this capex front, because you mentioned we are already at utilization level of 75 and 80% in auto and injection mold space. So what type of capex we'll have to do? Whether we'll have to do more bigger capex now, or probably we can still continue for 1 or 2 years with the normal capex?
See, for this year we are planning to spend about 30 odd crores in total capital expenditure. Mm-hmm. And we only invest in machines once we have a visibility with the customer. So in case any new model or any new project is on the way for any of the customer, we might need to invest in new machineries for that. Okay. So 1 or 2 years, I don't have a visibility right now, but it is a very floating kind of a situation, that whenever we get business, we review our capacity utilization, and in case there is a lag somewhere, then we decide to invest in it. But what we've done is we've made investing in doing capex basically is a very very serious and a very focused thing for us. So we are very careful of spending any sort of money on our capital expenditure now.
But sir, you already have reached 80-85% on the injection molding space, and probably at the most we will be reaching 90-95% as Manish mentioned in the call. So then probably you will have to take some call on capex in the near term only, because if you are trying to get more orders from some of the vendors, then you will have to be ready, right?
Yeah. I mean, that is a normal process. So whatever we have to do this year, so our capital expenditure is more or less in this 30 crore range only. Okay. And in case over the next couple of months we get some new business or some other kind of opportunity from the customer, then obviously we will need to invest in further capacities.
Okay, sir. Wish you all the best, sir. Thank you.
Thank you. The next question is on the line of Suvarna Joshi from Axis Securities. Please go ahead.
Sir, thank you for the opportunity, and congrats on a good part sale business growth that we have seen. Sir, just one clarification on capex requirements. You mentioned in your opening remarks that we've already incurred about 15.27 crore worth of investments in the first quarter of FY19, and the total capex requirement will be 30 crore for FY19. So are we then saying that in the balance of the 9 months we'll probably incur another 15 crores, or this 15 crores is over and above the 30 crore that you just mentioned right now?
So the total capex for the entire year is expected to be about 30 crores. And see, our capital expenditure is basically tied up with when the customer is going to start production of their vehicles. So in this first quarter, we've done almost 50% of the capex for the entire year. And that's primarily because of the launch of new models.
Right, sir.
So I think the balance of 9 months, we would be very comfortable doing another 15 crores only.
Right, sir. Sir, so then could you just highlight how much is the maintenance capex we would need, or it's not more, I mean, hardly anything, about 2-3 odd crores?
No, madam, the maintenance capex will be in the region of about 8 to 10 crores. And basically, see, we are looking at our overall budget at about 30 odd crores based on the analysis and the reviews that we have done so far. Okay, now this basically includes a variety of efforts and maintenance capex. Then it's basically debottlenecking, then Kaizen. Whole lot of initiatives are basically included in this, including certain capacity additions, which basically would involve maybe buying one or two specific machines where we are facing a constraint.
Right, sir. Very much clear on that front. So my second question was on the EBITDA margin front. Now, could you just help us, or rather, could you just break up the margin profile for us, as in how much of it is coming from cost optimization efforts that we are, putting in our organization, and how much of it is coming from the raw material pass-throughs, or just broad understanding on the components of our EBITDA margin would be really helpful.
See, madam, it is actually not possible to give you a breakup as to this is how much is because of this, how much is because of this. See, the process of improvement and increasing efficiencies is across the board, across the functions. Now,
right.
we are obviously with the forex going up, with the crude also going up. While we are not significantly impacted, but then obviously there is some impact that we are facing. However, that is getting matched with the other optimization efforts that we have made. And these are micro in maybe individual efforts, but then on a collective basis give the results.
Yes, sir. So I was just coming to this, given that we've seen some raw material price increases, some unfavorable forex movements. So just wanted to understand that how much of that has been offset by the internal efficiencies. I mean, is it that I understand that internal efficiencies are all across the year as we conduct our business, but what makes us stop from probably bettering our EBITDA margins, even in a scenario where these cost pressures are there?
No, see, it's a continuous process. Like, we, if you look at our historical trend on the EBITDA margins, you will see that they have reflected the efforts that the company has been making on a continuing basis. Meaning that has been very evident.
Right, sir. So, no, my point was, I mean, in terms of raw material costs, we certainly have a pass-through. Even in forex, we have a pass-through.
Correct.
Right. So, what I'm saying is, now we have seen some bit of an uptake in both the components, like both raw forex as well as raw material.
Correct.
And we work with OEMs on project basis.
True.
So I'm saying that the contract gets renewed only after a year is what I understand. Please correct me if I'm wrong there. So that is what I wanted to understand. Meaning, when in this kind of a scenario, we are probably absorbing the cost pressure right now and working with internal optimizations.
Yeah, so I'm actually not able to understand where is the gap appearing. See, we say a Yaris or maybe a Honda Amaze project that has come up. We have basically negotiated and discussed the pricing and everything has been arrived at, and basis which our sales is getting booked. Now there are certain clauses in the arrangement whereby the forex pass-through takes place, and in most cases the raw material pass-through takes place. So that is there, but then you will observe that there is a lag effect in that. So the forex is basically a quarter lag is there in that. So that happens.
Okay, fine, sir. That's pretty helpful. So my last and final question is on the Gujarat plant. I believe we've started commercial supplies from that plant to SMC, that is Suzuki Motor Corp. And in the previous con call, we mentioned that we've got entry into SMC for one of their existing models, which was earlier done by some other player in injection molded part. So have you seen traction for other models as well from Maruti for their existing models?
See, for it's actually SMG, Suzuki Motor Gujarat. So there they are currently producing Swift and Baleno models. So we've got business for both of these models for our Gujarat facility, and we're already supplying to them. And yeah.
So, I mean, these are the two models that we are working on. Besides these, have we got any other existing models of Maruti for any of the parts?
In Gujarat or in NCR?
In NCR?
In NCR, like I told Mr. Kalpesh also, so there are a couple of models which Maruti will be launching this year. So we already are working with them on those models.
Sure. Right, sir. If I have any questions, I'll come back in the queue. Thank you so much and wish you all the best.
Thank you.
Thank you. The next question is on the line of Dhruv Kashyap from Edelweiss. Please go ahead.
Yeah, hi. Hi, Abhishek. Hi, Manisha. First of all, thanks for the sort of awesome stuff that you guys have been doing. I think all of our shareholders are pretty indebted to you for the value that you've been creating.
We are just doing our job, that's all.
Great. I just had two very specific questions, Abhishek and Manish. One is that I want to understand this change in inventory a bit better from Manish.
Yeah, tell me, what is your question?
So there is a 788.54 figure versus a 9.32 in the base quarter and a 256.44 in the quarter-on-quarter. So there's a significant change in inventory of finished goods, work in progress, and stock in trade.
Yeah, can you help me exactly where you are sharing these numbers from?
From from the statement of unaudited financial results for the quarter ended 30th June 2018. It's under the expenses. It's 2C.
Okay, that is the change in the inventory. Yeah. So let me understand. Just a moment.
Because that kind of figure stands out from everything else. So from a 9.32 to a 256.44 to a 788.54. Just want to understand this figure because it stands out a bit compared to all other figures.
Yeah, sure. See, basically, this is largely on account of the inventory buildup that has taken place towards the molds that we are working on.
Yeah.
So, significant, now, there are two aspects to the business. One is the parts, which is the main activity. And there is the other activity of building the tools, the moldings, the tool and the molds for the purpose of making these parts. Yeah, so basically the mold inventory has been on the rise, and that is what is being reflected in this.
And is it on the rise for specific business reasons, or is it on the rise because you are holding inventory that is not getting liquidated?
No. See, these are all very, very specific projects. In fact, just a couple of minutes ago, Mr. Jain shared with you about the various projects that we are working on. So this inventory is basically reflecting the work that is being done on them. So at the time of SOP, that is the start of production, the customer buys the tools from us, which is what is reflected as the sale of tools that we share, that we talk about.
Sure.
So this is the inventory of the tools that we are building right now.
So to put it in simple English, if I've understood you correctly, what you're saying is that there are certain projects which are going to see the light of day in terms of production starting of new models, etc. And as soon as they're ready to start, a lot of this inventory of yours will go to them, so it will not sort of really reflect the same amount in the subsequent quarter or as and when the production starts.
Exactly.
So this is just a build-up for a product, for a production that's going to happen very quickly in the future.
Yeah, these are typically the projects take about, anywhere between 18 to 24 months. So the process of building the molds is a long-run process, and then, there are a lot of customer activities that are involved. So the life of the project, the development time is about 18 months to 24 months, and these are till that time the molds will remain on our balance sheet, and they will be reflected in the stock in trade.
So in layman's terms, the way to understand it is it's actually a good thing, because that means there's a lot of business action happening and you're developing a lot of things for a lot of products or customers that are going to sort of come on stream, and hence, as and when their production starts, you'll keep sending this stock to them and your inventory will accordingly increase or decrease.
Absolutely. Your understanding is totally correct.
So it's actually a positive thing. Got it. Great. The second question, which was a slightly more generic question, and sort of, Abhishek, I want to put this to you, is that, you over a period of time have been doing a sort of tremendously good job in expanding your customer base, both in terms of segments as well as in terms of the names of customers. So whether it's passenger vehicle or whether it's commercial vehicle, two-wheelers, and so on and so forth. Now, I wanted to understand both from a sort of XY matrix of the graph, that in terms of customers within a segment, let's say passenger vehicles or commercial vehicles or two-wheelers, are you looking at expanding significantly more? And within existing customers, are you also pitching and trying to get more of their models to come to you? And I understand that there is a factory-wise matrix, so Gujarat might be making something, Manesar might be making something else, and so on and so forth. So my question really being that across segments, where do you see your entries happening, commercial vehicle, two-wheelers, and passenger vehicles? And within each, which are the companies that you still don't supply to and you think you can crack? And third, the companies that you supply to, but you're not supplying for all their models right now, and where is an opportunity there? So it's a slightly complicated question, but I thought I'll put it as sort of simply as I can.
Yeah, so Dhruv, basically we are following the hands-off model, where the XY matrix is basically plotted on basis of products and customers, which is further then subdivided into new and existing.
Yeah.
If you look at customers for the products on the x-axis and customers on the y-axis, and new on the lower part and the existing on the lower part and new on the higher part. So basically in the bottom two quadrants we are quite, existing customers we've been able to sell. So that is basically our strategy, to attack new customers for our existing product range, as well as finding new opportunities with them, as well as for the existing customers, how do we expand the market more and get additional parts from them. So this commercial vehicle project that we did was actually a new customer and a new product segment completely for us. So that fit in on the top right of that matrix. For our existing customers like Maruti, Toyota, and Honda, so we are basically have a leadership position in the sealing system space. Honda, we still have a leadership position in injection space, but we have very limited presence in Maruti and Toyota and other customers for our injection molded products. So that is one clear focus for us, that going forward we want to increase our association with Maruti, especially for the injection molding products. And with that effect, we have established a plant in Gujarat, which caters to the SMG part of Maruti. On the NCR front, before 2014, we were primarily a sealing system suppliers to Maruti. When we established this Pathredi plant in 2014, so that time we were competitive enough of competing with the injection molding suppliers of Maruti, and then we started our some parts supplied to Maruti Suzuki for their Manesar plant. So this is the way primarily which we are going ahead with. So we are trying to expand our existing products to whatever customers we are not catering to right now. Like last year, for sealing systems, we were not doing any business with Hyundai, which we started last year. And this year, we are again developing a couple of more models for them. And apart from Hyundai, now we are also looking at the European makers, especially Volkswagen, for our sealing system growth. For injection growth, we are looking at opportunities in SMG and opportunities in Nissan, as well as finding out, expanding more opportunities in the commercial vehicle space where we've entered this instrument panel business. So we are not leaving any stone unturned for scouting of business opportunities, but the only condition that we are doing it is that we need a profitable growth to come along. So that is kind of a deterrent why we are not able to achieve a higher growth probably, but we personally feel that a sustainable growth has to be a growth which is profitable. We just don't want to chase top line and achieve a higher growth where, nothing gets value added to the company. So as long as the value addition is happening, we are chasing that opportunity in a very serious way.
So thanks, Abhishek. I think that's very well explained. I just wanted a quick couple of...
Sorry to interrupt, Mr. Kashyap. May we request that you return to the question queue? There are participants waiting for their turn.
Sure.
Thank you. The next question is from the line of Kushal Shah from Dolat Capital. Please go ahead.
Hello, sir. Congrats on the good numbers. Sir, I just wanted to understand on the capacity front, how much of a lead time does it take for you to start with the capex and for the completion of the whole capex? Thank you.
Yeah. See, there are two aspects to this. One is when we have to set up a plant, as in we have to set up the building, we have to construct the building, and then we have to install the utilities and the complete infrastructure. The second is that we just have to add a machine. Now, as you are aware that we've just completed our capex and the setting up of plants in Chennai and Gujarat. So going forward, very less time will be taken in adding a machine.
So I guess less than 3 months?
That's about 3 to 6 months.
And do you have the space, like at the current plants also, to get it machines setting up and all?
Yeah, as of now, we are not foreseeing a challenge.
Okay, sir. Got it. Thank you.
Thank you. The next question is from the line of Sagar Kharija from Chartered Capital. Please go ahead.
Hello. Congratulations on a good set of numbers, sir. So my question is on PPAP Tokai, the joint venture that we have. So we have invested around 49 crores in the company. So my question is that has the JV partner invested the same amount? Second is that what is the IRR that you have planned in this project? What is the maximum top line that you can do in this project? And how has the performance been in the first quarter of FY19?
Yeah. Hello, Sajid.
Hi.
It is an equal equity joint venture. So an equal amount has been invested by Tokai Kogyo, who is our technology partner and is the joint venture partner in PTI. We are having a reasonably good growth in the business. We basically share the numbers at the end of the year. So the project, the investment is doing good. Meaning it is on a fairly good growth trajectory.
Okay. But so what is if even say at maximum capacity, could you just give us a number what is the kind of top line that you can do going 2 years ahead, 3 years ahead? I understand that it takes time for a company to set up a good top line revenue. So if you could just throw some light on that so we can understand the potential of that business as well, beyond the standalone company that you're already running.
Yeah, so basically, it's a normal growth trajectory. We are continuously trying to get more and more projects in that business, and as can be seen over the last couple of years, we have consistently grown at a good clip.
Okay, so in FY18, how much top line did you do from this business, from this company?
We did over 60 crores there. In fact, those numbers are already there. Yeah.
Okay. All right. Okay, fine. Okay, sir. Thank you. That's all from my side.
Thank you. The next question is from the line of Ketan Chapalkar from Sapphire Financial. Please go ahead.
Yeah. My question basically pertains to if we are expecting more launches from Maruti, do we expect this tool sales to go up in the next few quarters?
Yeah, absolutely. Tool sales is an integral part of any model launch.
Yeah, so primarily since the part sales actually grown 26% in this quarter, so do we expect a significant jump up in revenues even going forward also?
Yeah, that is what the effort is all towards.
Okay. And sir, do you expect getting more and more business from Maruti? The current contribution is around say 48% to the total revenue. So do you expect this to go up significantly in the coming few quarters from Maruti side?
No. See, the revenue will go up. Okay, but the percentage to the total sales will hopefully not go up because other customers will also give us more business.
Okay, so you're expecting more and more growth from even Hyundai also in that case?
Yeah, absolutely. All customers.
Okay. Thank you. Thanks a lot.
Thank you. The next question is on the line of Agam Shah from Raj Trading. Please go ahead.
Hi. Congratulations on good set of numbers. So I think most of my questions are answered, but I just had a small question in terms of working capital. So I think on your number of days on a quarter-on-quarter basis has been increasing manually. So is that this number will be as our business increases, the working capital will increase, or will it remain at these levels?
Yeah. Hello, Adam.
Hi.
Yeah. Basically, our working capital increase that is being shown is basically because of certain specific factors, and the levels that we are having now are going to be maintained. Before the starting of GST,
yeah,
the number was significantly lower, but then as the GST got started, the debtor days increased, and thereafter our inventory for a couple of quarters has increased on account of certain specific events. Like in April, like in March, the inventory was up because of the starting of this e-way bill. So we wanted to keep the inventory so that there was no problem in the in the supply chain side.
Which vehicle?
Right? Sorry, come again.
Which vehicle you said the inventory was up due to?
The e-way bill. With the GST, the e-way bill started from the 1st of April 2018.
Yeah.
Yeah, so there was expected to be a fair amount of disruption. So to basically protect the company against that, we had raised the levels of inventory in March. Okay. This quarter, there has been a significant build-up of the tool inventory, and which in fact we discussed just a couple of minutes back. So there have been these specific reasons for the increase of the working capital cycle. But then it is not expected to go significantly more than this. In fact, should come down.
So right now, as in Q1 FY19, as per percentage, it's 53 days. So will it be in the range of 50 to 55 or sub 50 days?
See, basically this time it is because of this increased inventory on account of the toolings. As the toolings get disposed of, the number is expected to come down.
Okay.
So you could say around 50 days is okay. It will be around 50 days.
Around 50 days. Okay. That was it. Thank you. And all the best.
Thank you.
Thank you. Ladies and gentlemen, we'll be taking the last question. That is from the line of Suvarna Joshi from Axis Securities. Please go ahead.
Sir, thank you for the opportunity once again. I just had two quick questions. One was on Hyundai. You mentioned that we are working with Hyundai on a couple more models. So could you just help us understand that thus far that the commercial relationship that has been built up with Hyundai, how is that faring and how much does it contribute to our revenues? I understand it will be very small, but still if you could just help us understand with that number, it will be really great. That was one. And the second one was on the Volkswagen project that you mentioned. That is in the pipeline. So will we see something happening on that front in the upcoming financial year, or will it take about 2-3 years to materialize, really speaking?
For Hyundai business, we started our relationship with the Eon model, and now we are developing parts for another 2 models for them, which are supposed to start production of this year. So I'm not at liberty to disclose the models right now because they are under confidentiality agreement with Hyundai. But we are developing models for them, so 2 models now.
Right. So, sir, what kind of revenue potential can we see from Hyundai in FY19? Because I understand over the coming few years, the potential will really be large. But if you could just give us some sense of how FY19 looks like in terms of Hyundai, it will be helpful.
Hyundai could basically contribute about, I would say, in single digits to the complete turnover for this year. It will not be in double digits, but it will be in single digits.
Should be high single digits, sir?
It's too early to say.
Well, sir.
See, the magic, the engagement is, proceeding on pretty well, and we are expecting to basically see fairly increased offtake with Hyundai. So, beyond a certain level, we are not at liberty to share more.
All right, sir. And, sir, just an update on Volkswagen, if you could share your thoughts there.
Volkswagen also, I think you must have read in the newspapers very recently that Volkswagen is pushing a new model through Skoda relationship. So we are discussing with Volkswagen about that model and how to start production for those models.
Great, sir. That's really good to hear, and I wish you all the best. And I hope the company keeps generating shareholder wealth over the years. Thank you and wish you all the best.
Thank you, ma'am.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
Thank you, Lizanne, and thank you, Snyder from Concept, to organize this conference call. I would like to pay my sincere gratitude to all my analyst and investor friends who have taken time out of their busy schedules to listen to us today. Please feel free to contact Concept or us in case you have any further questions. Also, if you happen to be in the NCR, do give us an opportunity to show you around our world-class operations. Thank you so much for today.
Thank you, sir. Thank you all for being a part of the conference call. If you need any further information or clarification, please mail at snyder@conceptpr.com. Ladies and gentlemen, this concludes your conference for today. Thank you.